Good afternoon. Good afternoon, everyone. Sorry about getting connected here. We ran into a little problem. Not sure what the issue was at UTub. So sorry, we're a little late coming in. Zagrid's asking, can you describe ABC triangles? I'm testing the pattern on custom Rincos provided by TradeStation. Um, can you describe ABC triangles? I'm not sure what you're referring to. So I don't understand. Sorry. You can try again. But good afternoon, everyone. It is November 13th. November 13th at just about noon. We ran a little bit late. We continue to sit on our short, and we're going to continue hopefully here. We're not going to let it dry down too much. We've had a little bit of a draw. We had as much as 950 for the week on this short Dow and a run up as high as 2000. And we're staying with this trade, even though we're against it right now. And we're choosing to do that. And I still think that we're going to do pretty well here, but we're not gonna we won't let it drive back down again. We can maybe get it at a higher price. Sometimes you have to think this through a little bit. You may want to stay with the trade, right? You may want to. And but if it's gonna force you to draw down, you can still get the trade, but at either a lower level or at a higher level. So you gotta kind of weigh that through. You don't have to stubbornly stay. But we're profitable with this. We've been profitable the vast bulk of the last couple of days here. And it could be a little bit of a relief rally. I think the markets are kind of rejoicing, not because of a political outcome necessarily, but maybe this perception that, that it's over, and so they just elected the Senate Majority Leader, this guy Thune. Um, I think Trump's going to have to realize I think he already does realize he's got as much of a problem with people in his own tent or under his own tent than he does outside. So, but the markets a lot of times they like gridlock. They just like that kind of stability. So there might be a little reaction if you hadn't heard that Senator Scott, perceived to be a solid Trump supporter, did not get the majority leadership up of the Senate. So Trump is going to have his work cut out, and he'll have to do some horse trading. But we just take a look at the markets, what's going on here today, and that's always what we're doing, right? And we're going to try to be giving you, more of a view. If we can get back to a little bit of a schedule, kind of the middle part of the day. This broadcast will last about 50, no more than 60 minutes. It's your opportunity to ask questions. And again, ABC triangles, I'm testing the pattern on custom Rincos. I'm just not sure um, what that is. Um, in Zagrit, I don't recognize your name. If you are a member, I apologize. If you're a member, definitely let me know. I don't know ABC triangles. Again, I don't know if that's something that is something proprietary. Is that something at TradeStation? Um, you should be aware. Custom Rincos, I love trading custom Rincos. I absolutely do. But they're they offer the most distortions, the most. And they can look a lot easier to um to trade than they actually are, right? That can be the case with a lot of things, although I do love to trade them. And we trade them in a number of different ways. One of the products that we like to use is something called SMC Dual Fairway. Unable to post swings video, the ABCs of trading. The A Unable to post video, the video of the ABC. Is that from one of us? Is that one of ours? Video? The ABCs of trading, Rinkos and more. Maybe let me do a Google search. Maybe. Oop. Could be, it could be one of ours, and but I just don't okay, let me go look and see if I can click on this. Um Video ID. Let me see if I can. I apologize, we've, have videos that go back years, so um let me see if I can get it. No, that didn't come up. Is the video Zagrid? Is it something that we produced? If that's the case, I'll just let me go look. I'm gonna have to do a search myself. ABCs. Okay. The ABCs of trading Rinko. All right, so let me go. ABCs of trading Rinkos. Oh, oh, that was like 6 years ago. All right, so let me go look. Morning, everyone. My name is Don Marshall. Okay. Um, so that video goes back several years ago, and but let me show you what we're saying. And by the way, that video was not on custom Rinkos. It was on classic Rinkos. Um, so it's a little dated, but what we're it isn't, and maybe I did use the word triangle, but we don't um probably use that today. But let me explain. And it's more easily seen with Rinko, but this could apply to any chart. And the patterns that we're talking about are the ABC structures. So you come up, you pull back, and you run up. An ABC structure, or maybe a triangle, right? Um, this is the A point. Oops. Let me increase this font. This is the A point. This is the B point. This is the C point. And then this would be wherever this ends on the pivot would be the D. It's an ABC structure, ABC to D. And and they repeat, right? Now this is, in a perfect world, right? But you do see them quite frequently, with the Rinko. But that is normally the structure of, and what we're drawing here would be a an upturn or an uptrend. And then, like I say, we may get another pullback, may do something like this, and then we get yet another ABC structure. So, and maybe this is something you already know, but maybe not. And let me kind of bring back. So what's happening here is there's a number of things that are happening. The You can see these little pivot. This is a pivot point and a pivot point. This These are low points or pullbacks, the dips. The dips are higher than the previous dip. When the dip is higher than the previous dip, or the low is higher than the previous low, then that is what gives you the very definition of an uptrend. So there's one thing. So we bring your eyes to it. And that's what I was trying to do back some 6 years ago. But back 6 years ago, we didn't have all the tools that we have today. So when you're watching that video, you might be running into some of the problems that we think that, we've tried to solve, and that folks would be getting vertigo. They can't tell, like, okay, you can't read it that fast. So, but this constitutes an uptrend. The other thing that this constitutes is, if this is the A point, this is the B, this the C, and then that would conclude with a D. But then again, if we go again, this would then magically become the A, this becomes the B and the C, and they just repeat. One of the things that we feel that we know is, let me get a marker here, get a yellow marker, is if we know the length of the A to B leg. If we know what that length is, how many points, how many bricks, how many boxes, but if we know what that length is, then many times the C to D leg, not always, but many times the C to D leg is the same length, or it could be a little bit longer, which means that it might be extended. So that's kind of interesting for us to know, to be able to see. The entry place, when we're in uptrends, what we're teaching is to get into the trend. That you're going to do better getting into the trend than trying to fade an uptrend. You know, what many people, there are probably too many people, are trying to always pick a top. Um, and there's a technique for doing that. It's like, I mean, a counter trending, but ideally what you're doing is you want to be entering, in an ideal world, you'd want to be entering right here. This is where you'd want to be entering. And ideally you have a stop right here and you're entering long. So you're entering off of what we call the C point and you're trying to bring it up. Um, and getting on the trend. So if you are able to identify the C point, then you should be able to identify the A to B leg. And if you can identify the A to B leg, then you have an idea of what you might make and what you might lose. And what you might make best be some multiple of what you might lose. Now, if this A to B leg is stingy, meaning it's not that many points, then maybe you don't want to put the trade on. You don't want to risk, 1 unit to make a half a unit or a fraction of a unit. You want to risk 1 unit to make 3 units, 4 units, 5 units, 10 units. So that's also what's going on. Also, what's going on is, and this repeats, when you continue to go and you pull back, if you pull back just a third of the run, you might interpret the pullback to be shallow and the health of the overall trend to be good. If the pullback is 50%, you might say, okay, it's normal and the trend is still intact, but it's noteworthy. But if the pullback is more than half, 0.618 or more, or even 80% back, then you've got to be thinking, hey, this uptrend may be losing steam. It might be failing, and maybe you don't want to enter that pivot, right? So that's was really, in that video that you watched, and thank you for watching it. We don't take them down, but that was 6 years ago. And so we've done so much more. And one of the things being is that identifying robotically the seed point, as well as other things, so that folks could and machine that either through their own trading or have the machine enter it and have these points identified. Because you can also have it coming down, right? So, you can have a trend that does this, right? Then right back up and then come on down, then rip back up, proverbial down trend. This is the A, this is the B, this is the C. You want to enter in here, short, stop here, and take it down. Makes sense? Um, Trend long, trend short. Now, these dips, or rips on an uptrend, these are dips, and dips should be bought if you're going after the trend. When you're in a downtrend, these are rips, and rips should be sold if you're going after the trend. If you are counter trending, then yes, you can get in here and fade the dips, but you've got to know what you're doing, where you enter, where the stop goes, and you also have to throttle back your expectation in terms of how much money you're going to make. When you are counter trading, whether you're counter trading short, counter trend short in a long trend, you're not going to make as much money as if you're on the trend. You'll make a little bit, but not much. And the risk is higher if your trading is not flawless. So it needs to be very, very good. But you have a lot more dips to buy, or excuse me, to counter trend. You have a lot more dips, and your winning percentage is going to be a lot higher. But that doesn't necessarily mean that's a good thing. It doesn't, and the same is true over here. Um, these rips should be sold if you're going after the trend, but if you want to counter trend the downtrend, so you want to buy in here, then you're only going to make a little bit, and you got to be sure that you execute flawlessly, or you can get carried out to sea. And that all said, that what is additionally even more challenging is this is in a trending market, trending up, trending down. On what interval? What are you looking at? Where are you trying to trade? Are you trying to trade, at a tick size? Are you trying to trade at a brick size, a box size? Are you trying to trade as a daily swing trader? Which wouldn't be intraday. So you've got to decide on the resolution of which you're going to trade. And that's going to dictate how, a lot of things. It's going to dictate how frequently you trade. It's going to dictate, the amount of leverage. The other piece to it is markets on any interval, which makes it more challenging, is that they're only trending about 30% of the time. 70% of the time, they're going sideways. The proverbial chop. That's when you'll hear new traders say, "Oh, it's a crappy day. It's chopping. Well, that's got to get used to that because that's what markets do 70% of the time. And that's when they just go on sideways. And this is a technique for trading chop. And then there's a technique what to look for when we come out of chop. Makes sense? But for the new person, it's can be easy to get vertigo and lose sight of it. And but we can write programs to help you see it and to help you trade it. Now, even the machine is going to have losing trades. You're not going to be able to do it without losing trades, but you're going to do it so that we don't want any negative outliers, and we'll hopefully have some positive outliers to more than make up for some of the other losses. That makes sense? Um, I gotta send out a little tweet here, let everybody know. I don't know why we weren't able to come up. We had saved this live stream, but it didn't come up. And the other part of it of this is every not every trend, every new trend begins with a counter trend. Every new trend begins with a counter trend. However, not every counter trend becomes a new trend. Very, very important to understand. Very important to be aware of that. Because if you are a new trader and you don't understand and you put on, in essence, a counter trend, and you are rewarded because you just happen to catch the trend, then you will get imprinted, your psyche, your experience will get imprinted, and you will continue to put on counter trends with an expectation of catching the trend, and you will be immensely disappointed and you will lose a lot of money. That's how they trap you, especially in a downtrend. The pros, we call these rips, but the pros on Wall Street, do you know what they call them? Fish hooks. Fish hooks, because they catch people. They hook them in the jowl. Nasty, like gaffing a fish. So in that video, that's what we were probably trying to address a little bit, create a little bit of awareness. That was 6 years ago. And let me show you, let me clear this. If you got any other questions, let me know. Um, let me erase this. And show you what the C points look like real time. And let's go to the Renko chart. This is a Renko chart of the S&P. And each brick is $1,000. And here are the C point longs. C point short, C point long, C point short, C point short, C point short, and one that ultimately failed and then broke away. Now, so this is a beautiful view, and these tools didn't, many of these didn't exist. They existed, but they weren't as simple, maybe. So we've also, and that's the thing, is that we've been doing this a long time. We've courtesy of Stock Market Caddy, we've gotten a lot better, and the tools have gotten a lot better, so that folks can have an easy view. I hope that makes sense. In the meantime, for the week, we started with a beginning balance on Sunday at 6 p.m. of 30,000. Right now it's modest. We're at 31.7. We have a $700 profit in this trade, and hopefully we're gonna resume the downtrend here. Near term, she's bouncing, and we're choosing to sit on that short position. And the reason is that the daily view. It's unusual for this, but the daily is so extended for us that we're getting other indications that the daily is going to let go. So we're foregoing some of our intraday trading here, which is unusual, not normal. But we're choosing to do that because we think we're going to get a pretty good pullback. If you've got any other questions, don't hesitate. Zagrid, thanks. Thanks for the question. And otherwise, we're going to let you just watch, and I won't ramble on. This YouTube session is not meant to prove anything, not meant to suggest that that you should do anything. We're not handing out trades. We're not suggesting that this is something that you should do. The reality is probably most people shouldn't do it. It's time consuming. It's you've got to be disciplined. You've got to like to make decisions. You've got to have risk capital, and among other things, it's got to be something you really, really like to do and you really, really want to do. If it is a source of aggravation, a source of frustration, um, taking time away from is really meant to, to provide more time. What are the dangers of small profits, highly profitable trades, mean reversion, shorting options? Um, and I was just going to say is that it really should be a means, of providing satisfaction and providing you more time. If it's not, then maybe not something you want to do. What are the dangers of small profits? Um, Well, it isn't, I don't know if I used the word danger. Maybe I did. I got to be careful. Um, what happens is um, most um, there's a couple of things. Um, most professional option traders and I don't put myself in that category as a professional option trader. We trade quite a few options, but we're not a pro. I'm not managing anyone's money, right? We're not a broker, we're not a financial advisor. So there are those folks out there that do that. Um, but most of those traders are selling options, right? And they're when we're talking about options, they are mean reverting. They are looking for reversion to the mean as opposed to trying to get on the trend for the most part. And they're selling options. When we do our options, we also mean revert for our options. We will, but occasionally we'll try to go after the trend too. And but we're using defined risk options. The danger, whether you're trading options or futures or anything, the danger is in making decisions based purely on the money. And I think new traders are susceptible. Well, I know they are. They're in Wall Street knows they are, and Madison Avenue knows they are. They're very susceptible to taking their profits because they want to take the profits. They think, I got to win. I feel good. I make money. I make money. I make money. And they're making the decisions purely on the money. And and when you are making the decisions purely on the money, you may not appreciate this, but trust me, they know Wall Street and Madison Avenue. When I say they, it's the two of them together. They know they have you because you're making the decision based on greed and fear, and you will lose. They know that, and you will. you will. It's vicious, it's insidious, and they know it. And so you want to you want to remove yourself and from that whirlpool. It's basically a whirlpool. It's a vortex. And there's another saying, not mine, but comes from a professional trader, and he says that, the retail traders, they eat like a bird, small bites, and they shit like an elephant, big losses. Because what happens is they take profits because they want to feel good, and they're like, okay, I'm going to take the win. I'm going to take the win and feel good, feel good. And then when they get in a loss, oh, I don't want to take the loss because I'm going to feel bad. I don't want to take it. It'll come back. It'll come back. And the next thing they've taken all these wins, and that's why, having a win-loss ratio of 90% doesn't mean anything, because you could have 9 wins in a row of $1,000, $9,000, and, feeling great. And then you get on the 10th trade and it goes against you, and you're down 1,000, you're down 2,000, 3,000. Oh, it'll come back. I win 90% of the time. And the next thing you know, the trade, you lose 30 grand, and psh, you're gone, or it's gone. Money's gone to money heaven. So that's the danger. And that's the psychological part of it. How do you get yourself out of that loop? In our view, you need to learn how to fly the plane. You need to go up in the plane, with a co-pilot, and he's going to have to put you into, a spiral, and orientate you in the steps of what you got to do to get out of the spiral, and get the wings level and get moving again. The pilots talk about, listening to your inner ear. It can get you killed, right? It killed JFK. He's flying a plane, and he loses sight of the horizon. His emotions take over. And rather than focusing on his instruments and on his gauges, he's now listening to his inner ear, and just a horrible situation, and he winds up in the ocean. Same thing can happen to traders. It's not listening to the inner ear or someone else giving them an opinion. And that's what I don't want to be doing, because we know what we're doing very specifically, and and we are here to help mentor and to help people pursue at least an opportunity to do this for themselves, learn to trade their game. So hopefully that makes sense. You cannot take out the risk in life, or certainly not in trading. You're not going to take the risk out. Not unless you're Citadel and you're getting the order flow in advance, and you got tomorrow's newspaper today, and you've got something like that inside, an inside track or something. And then that's for the most part, illegal. We don't have that, right? We're just using tools and technology to manage our risk. And if you're constantly seeking, that the proverbial holy grail, um, you know, I got to be careful there, because we do seek it, but when asked, and amongst ourselves, even our members, we know that the reality of it is that the holy grail really doesn't exist. There isn't going to be one program that's going to trade all markets, all intervals, all time frames, and constantly win for the rest of your life. It just isn't going to exist. It isn't. Now, for periods of time, yes. But so to that extent, the Holy Grail, in our view, is you. It's you. What you think you can do. And if you come at this, I think folks should be skeptical, but if you come at this that I can't do this, then you won't do this. If you come at this, I always lose, you will lose. If you come at this that, I just can't stop chasing the money, then you won't stop chasing the money and you will lose. The mind is incredibly powerful, right? It isn't enough, though. It isn't enough to say that it's important to say that I can do this, I will do this, and I'm determined to do this and or not losing. Failure is not an option. I think all of that is very, very important. I don't care what it is you're doing. I think it's very, very important, but it's not enough just to have that. And I can't describe to you everything. We have a 3 week plus Q school. I can't describe everything that you need to be aware of in a 1 hour YouTube session. No more than, that's what's so dangerous. Somebody goes to the Caribbean and goes into a pool and they teach them how to supposedly dive in the morning, and then they go out on a little boat in Jamaica, and the guy driving the boat is smoking weed. True story. And off the boat they go and they go diving. Susie and I, we witnessed that, we watched that, but did we go diving? Hell no. I'm like, no, Susan, we're not going to do that. You want to learn, we'll go out on the boat and go snorkel and watch all the divers, and then we come back, and if it's something you want to do and you want us to do it, when we get back to Tampa, we'll get Patty certified and learn how to dive. And that's what we did. But are there people that go on vacation and take these little dive lessons in the pool and then go out and do it and come back and be safe? Yeah. But there's also, horror stories. We know of horror stories, right? So makes sense. But thanks for the question. Let's just take a look at what Swing Machine is doing. And be sure to push the notification button. So we'll try to come up at a more regular time, middle part of the day for about an hour. We'll try to, at least a few times a week. Um, so we create a little awareness. Let me show you. This is the VIX on a 5 minute basis, and the VIX did what? Um, Turned down at 835. So what about exponential betting size? Kelly or optimal? Exponential betting size. I'm not sure. Are you referring to the martingale type thing? Let me know. We're on a little bit of a delay, so I'll wait for the response. You might be overseas, especially if you're overseas. I don't know why the martingale is real popular in Europe, especially with the Forex traders. So if that's what you're getting at, let me know. And so now we come in. So that short option at 835 tells us that the long side might be the place to be today. Now, we're doing something different. I don't like going against Swing Machine, but sometimes I will. Not usually, but I am today. And then the NQ, so that was at 1045. You needed to put that trade on, you need about $1,800 in your account. So you're up quite a bit, more than 50%. This one is 1150, not that long ago, up 1,000. This one at 755. The Russell is still short from 1220. Gold is short. And then oil long. We'll just highlight all the long ones. And so I'm sure of what you're referring to about exponential betting. Yes, authors Ralph Fentz, Ryan Jones, and Larry Williams. Yes, exponential betting sizes. Yeah, I don't know. I recognize a couple of those names. But I'm suspect. But if you're referring to the martingale is, as far as I'm concerned, is a scam. And what that is, that's the gambler's fallacy. That if you place a bet and you lose $5, as an example, for mathematical trading methods for futures options. Yeah. Um, I would, what we're trying to do is give people, if you have an interest in that, give yourself the tool set to develop and to either develop your own and or test those things out, right? So I would need to know, what somebody is suggesting specifically, and then I'd want to be able to test it out, mathematically. I mean, through a back test, write the code and to back test it. But the martingale system or the gambler's fallacy is this: you lose $5, and then on the next bet you bet 10, and then you lose 10. Then on the next bet you bet 20. You just keep doubling the bet, and then eventually you'll win. Um, that's the gambler's fallacy. You'll run out of money. You'll get killed. You get killed. So, um, so we don't suggest that at all. Let's highlight the shorts, and here is the Russell trying to get short right here, which is a bit of a tell at 1220, and then gold is continuing to get hit on the strength of the dollar. So there you go. Now, our job is to, get a piece of this Bitcoin. Bitcoin, this is a huge contract, right? This is the BTC futures contract. We put it in here so we can track the price of Bitcoin, but it represents 5 coins. So it's leverage, tremendous leverage, huge. So I'm not going to say anything, negative about any other trader or any other approach. There's a lot of different approaches and a lot of good, good, just that good approaches and some very good people, and then maybe not so good. Um, what I would suggest, what we encourage is learning and then being able to take some of those systems and back test them yourself before you commit your time and capital to do that. A lot of the programs, I say a lot, but a number of the programs that we have come from our members who have come across various trading techniques and have asked us to code it, not just an indicator, but a full-blown trading approach, and then back test it and forward test it and assess its strengths and weaknesses. And they all have strengths. Well, I shouldn't say they all have strengths, but they all have weaknesses, right? There'll always be something, and you want to know. We try our best to make sure that folks are aware of what those weaknesses are. Particularly in the back test. That makes sense. So we have been on for we're working on close to about 50 minutes or so. We're a little bit late. If there's any other specific questions, you let me know, and then we will have to turn down. And we'll try to come up maybe a little more periodically, during the middle part of the day, and answer any questions. How necessary is multi-time frame analysis? How necessary? Um, well, we're using 135 here because it's just very comfortable to us, but we have other members that use other intervals, less intervals, and we have others that don't use, a layered approach. Um, so it just depends on what you're trying to do. As far as being necessary, we just say, you know, um, we have more programs and more tools than anyone's going to probably be able to comfortably use in a year's time. Find what makes sense to you, what you're comfortable with, and then just repeat it. So I wouldn't use multi-time frame if you have something simpler and you can get it done. But if you're not getting it done, or you want to try to smooth out the volatility in your account, then it'll be something you'd want to pursue. And I think, so I mean, we like to do it, obviously. and it can smooth out the volatility in your account. If you're focused purely on every individual trade, this is where, despite what I say, despite is the beginning trader, the person who opens up that account, wherever it is, they put on that trade and they're balls to the wall vested in that one trade. And then that trade's over, and then they're balls to the wall vested in the next one, and the next one, and the next one. And they're just, you know, they want to get a single, or a double on, what on every time they're at bat. Um, that's going to be a hard way to go. So you have to come to grips that they're going to be, to play this game, you're going to have losing trades. And so you got to do some other things to set up yourself for success. And we talk about, controlling the things that you can control. And if we can help you become aware of what those things are, then you go from there. Okay, it's going to be 1 o'clock shortly. I'm going to wait just a few minutes, and then we're going to have to turn down. And but today's only Wednesday. We'll try to punch back up for a little bit either tomorrow midday or maybe Friday. And we hope you're having a good week. If you want us to look at any particular market or stock, I'm happy to do that. And we'll just hold on here because of the delay on YouTube. No, not bothersome at all, Zagrid. That's why we do these little sessions, is to answer, those questions. Um, Hopefully we can save you some time, save you some money, and like you say, trading isn't for everyone. We don't suggest that it is. Okay, everyone. I just want to say thank you. Sorry for the delay, and thank you for stopping by. We'll try to give you a peek in over the next the next day or two, and we'll try to do it periodically. Zagrid, thanks for your questions. I hope it helps, and we wish you the best. Have a good rest of the day, trading day and week. Thanks.